go ahead and put your order in up here, and that'll be triggered. And okay, start over the next day and try it again. Alright, so now I'm going to run you through this trade on my demo account. Okay, go. Okay, here's my demo account, interactivebrokers.com. Yada yada. Okay, going through this order, and something else I want to add. You know, in just a matter of a few minutes each day, you can put in your order and be done for the day, 5 days a week, Monday through Friday, and hopefully make some extra money. Okay, so here's my order. That was the euro dollar. Euro, I guess the US dollar. Okay, you'll see the last price is 1.36. Okay, and we wanted to sell, which is going short. We're going to short this, which means we think the price will drop. And I usually trade in one lot, sometimes two lots, depending on what the stock market's doing. So one lot, and I'll go over this more later, one lot is 100,000. Doesn't matter of what currency you're using. One lot is 100,000 euros, it's 100,000 yen, whatever, 100,000 baht, dollars, Zimbabwe dong, or whatever the hell. It's 100,000. Okay, and mostly what we use is limit orders on this guy's trading signals, and we wanted to sell at 1.3633. Okay, time and force. I'll go ahead and put it for good to cancel, because I know I'll be up in another hour or so. So if this order doesn't get filled, then okay, I can cancel it myself and be done. Alright, see, everything else looks good. Accept this order. Okay. And then we're going to attach a bracket order. And every broker is a little bit different. Like I said, this is one of the most complicated brokers that I've ever used. I really don't like their setup and trying to find out information. Okay. Alright, so we're going to sell it first off at this price. And then this is going to be this limit order. This will be our take profit order. So once it gets down to 1.3433, we want to go ahead and take our profit and be happy. Okay? This is our stop. In case it moves against us, we think the price is going to go down. But in case it keeps going up, we want to cut our losses and move on to the next trade. And our stop loss is going to be 1.3869. Okay. Then we'll transmit this first order, and you're done. That's it. You are finished. And I didn't even look at the time. What did it take us? Maybe 2 minutes, 3 minutes, something like that. That's it, and you're done. Right, before I go any farther, I'm going to show you a short little film that I found on short selling or going short. It's on YouTube from informedtrades.com. They have some pretty good videos on YouTube, so go check them out. This video gives a pretty good and easy to understand explanation on going short. When they say in here that when you're shorting one currency, you're going long the other. That's true, but don't let it be too hard to try and understand. It's really not. Shorting means you think the price is going to go down, so you sell it, and then when it goes down, you buy it back. It's that simple. And if you've traded stocks, currency is not much different. U.S. dollar, euro, basically, that's a stock to me. I mean, it doesn't change. Either think it's going to go up in value or it's going to go down in value. Pretty simple. It's not that hard. Once you do a few of the shorting trades, you'll be fine.
Short selling. Traders short sell when they feel the price of something is going to go down in value. When a trader sells short, he will borrow that item when the price is higher, sell it, and then later on, hopefully after the price has dropped, will buy it back and return it. Let's look at a real life example. Let's say your friend owned a rather large tank of gasoline back when gas was selling for $4 a gallon. Let's say you borrowed your friend's gas and then sold it all off for $4 a gallon. Now let's say you waited till gasoline prices dropped down to $2 a gallon, and you went and you bought that gas back and returned it to your friend. You sold it for $4 a gallon, but you only paid $2 a gallon to buy it back. So you made $2 a gallon. Let's look at the same situation in a stock market. Let's say you thought the price of a stock was going to drop in price, and the current price was $10 a share. You would go to your broker and borrow 100 shares and sell it at $10 per share. Later on, after the price of the stock dropped in value to $8 a share, you buy that stock back and return it to your broker. Therefore, your profit is $2 a share. It's the difference between the price you sold it at, $10 a share, and the price you bought it back at, $8 a share. This is also called covering your short. In Forex, things work a little different. Because there are always two currencies in every transaction, you are always longing or buying one of the currencies at the same time as you are selling or shorting the other currency. More on that in the next video. As we've now covered how short selling works in the markets, we are ready to move on to our next video, which is how Forex transactions work in general.
One, 2, 3, go. Alright folks, here's our order that we just put into my demo IB account, euro dollar, selling it. Stock market just closed about half an hour ago, and it's 4:30 in the morning here now. It's 4:30 in the afternoon in New York, 3:30 Houston time, afternoon. Okay. Now remember, it said 12 hours, which meant we should have canceled this order at 4 o'clock. Well, I'll probably be up for another couple of hours, so I'm just going to let this order keep going for another couple of hours. We're not in it yet, so we're not losing any money, but it is getting very close to our target price. It's made a pretty good move up since we put this price in. Okay folks, this is a little simulation to help you understand a little bit more. This is using the trade that we input on my demo account, euro dollar. We're going short, which means we think after it hits this price, we think it's going to drop in value. So we're shorting this. We're going to sell it. Short selling. Okay. I trade in one lot.